Hey guys, welcome back to my channel. It's Emmanuel, and today I just want to be talking about the psychology behind trading. Now, when you hear psychology, it basically means your mindset, you know, how you think in general to particular things or a theme. That's basically what psychology is. So, the psychology behind trading is basically how you think all the time when you trade. What is always going on in your head? And when you look at psychology and you compare it to words like trading system, we tend to place more value on the trading system because we automatically believe that if the trading system is really good, it will help us make a lot of money in the forex market. And that is one myth that is being passed around, being passed across over and over again. Um, the truth is that if we put a percentage to trading, let's assume 100%, and we were to break it down, like successful trading is 100%. And we're to break that 100% down, 90% will go to psychology, and then the remaining 10% will go to your skill set. Psychology is, it cannot be stretched out how, it can't be stretched out enough how important psychology is when trading. You can't have a weak mindset when it comes to handling money. We know that generally. And Forex is like all about money. So your psychology has to be very, very valid, very rigid before you ever say you want to learn how or want to trade live. Um, I'm reading this book, Naked Forex, and it's by Alex and Walter Peters. And they highlighted three myths that people believe are necessary to successful trading. And the first one is they believe that successful trading must be indicator based. If you check out my charts now, you're not even going to see any indicators. But when I first started, I mean, there wasn't like any indicator, name it, that I didn't really know. Is it the moving average? Is it the alligator? Is it RSI? Is it the stochastics, the oscillators, awesome oscillator? I knew a lot of them, but it's not like indicators are completely useless. But the truth is, you do not need them. They're not necessary for successful trading. So I actually did make this video because in my previous video, I spoke about the institutional trading and why it's so important. So this is just to add, you know, more information, shed more light on what exactly I said in that previous video. And I need you to understand that the institutional trading I was talking about, that is just one trading system that we have out of the thousands and thousands of trading systems that there are out there. And you should also know that when it comes to institutional trading, there are various ways to also trade on the institutional level. And each of those trading systems, they work. But what is important that will make you successful with your trading system is the psychology you carry with that trading system. What do you actually tell yourself every time you trade? If you put money into a live account, maybe $100, $200, and you make a loss, and then for some reason you decide to go in again and place another trade, what exactly were you telling yourself? So let's assume, okay, you did place another trade and it was also another loss. What are you telling yourself? And the same thing applies for winning trades. When you win, there is this euphoric feeling that you feel like you're invincible, or you feel like you know everything that you're doing. And the brokers know that, the big banks know that, they all know that even if we do tend to win once in a while, in the long run, 90% will still lose and return all that money back to the market. And the cause is because of the psychology. Now, there are traders who they can hold their trades for a very, very long time. And we call them investors. There are some who hold their trades for days, weeks, months, and who open the trade today and close it today. The only way that you can categorize yourself these as one of these, either it's a day trader, you opened it today, closed it today, a swing trader, you held it for a couple of days or weeks, maybe even a few months, and investors, you held it for months or years. The only thing that categorizes us under each of this is the time we opened the trade and the time we closed it. And you need to understand the psychology behind each of those people. It takes really strong mindset to hold your trade for months. Incredibly strong. It is incredibly hard. It's incredibly difficult because when you see winning trades, you basically just want to take the money out. And I've watched in so many videos that the truth is, like, if your trade is winning, you should actually be adding to your winning trades and not try to cut it short. Yeah, they're trading systems. I mean, they're trading plans that involves us, taking half profit, taking partial profit. But I've also heard it several times where, okay, maybe someone entered trade on gold, and by time gold maybe went down like 500 pips, the person has already closed maybe 70% of their positions. And then gold went down 500 pips initially, and then the person closed down 75% of their positions. And then gold crashed down maybe total of like 2,000 pips. And the person has already closed 75% of their positions and has how much left? 25%. That person, there is no how the person would not feel a bit sad, because if he held those positions, all of them, it would be way more money than what is going to be showing on his trading account. And that falls under psychology. No one told him to close the positions. He told himself. Did the trading system give him that entry? Yes, it did. He entered how many times? Maybe 10 times. And then he closed what? 75% on his own. Do you I think you should be getting where I'm leading to. No one else is going to tell you to close your trade or open your trade, except maybe you're trading with someone else, and you know whatever reason it may be. But if on his own he told himself to hold all those positions, the fact is there will be more money in his account than what it would be showing. The second one that they believe is that successful trading is complex. Trading is not complex. Yes, it when you firstly dive into the forex market, it's vast. The knowledge and information in the forex industry is very vast. So that may seem to be the reason for, I'm sorry, excuse me. That may seem to be the reason for its complexity, but in reality, when you learn what you need to learn and understand what you need, to understand, to make you money in the foreign exchange market. It's rather simple. All you just have to do most of the time is wait. Warren Buffett said, trading is the art of moving money from the impatient to the patient. So, how well can you wait for your trade to come? In fact, while learning how to trade, there are times where price may come close to your entry, and you know what, you just want to enter, you just want to enter, you just want to enter. And you tend to see that some cases, like we know that there are good trades and then there are bad trades. Now let's assume that trade was a bad trade and you entered earlier than price got to your entry and hit your stop loss. You lost more money than you planned to lose because you didn't wait for price to get to your entry. Psychology. No one told you not to wait. You on your own decided to just jump into the wave earlier than you already planned for. Sometimes you could jump in earlier because the trade is a good trade, it still ends up going your way. But then these are things that happen that if you continue to do them on the long run, it will not be good for you and your trading account. And it all falls under psychology. The importance of psychology cannot be stretched enough because anybody can learn, can go on the internet and learn a trading system. But then to master the trading system involves you understanding the intricacies of that system and what is needed to be done each time you see that system. And then when everything you need is playing out, you have to just wait so you can get your entry, get in, and be patient for your trade to reach your take profit. There are a lot of ways that psychology affects us. In fact, I just mentioned take profit. There are a lot of cases where you see people saying, okay, oh yeah, okay, this is going to be my take profit. But then price is somewhere around here, and then you just get out of the trade because it's already so close to you take profit. But then maybe you check back a day or two later or a couple hours later and you see that price reached your take profit. And not just that, price is here now. I'll give you a pair that I took, for example, UJ. Um, on this pair, I entered right here and my take profit was up here and it got reached. But see where price is right now. I mean, following my trading um, plan, following my trading system is the number one thing that any trader should do. But then no one told me to get out of all my positions. I decided to get out of all my positions myself once it hit my TP. I could have left maybe one position at least and just trail stop it. That is just raise my stop loss little by little to save the earnings and still be in this trade. Maybe my trail stop will be here by now. So this is how important psychology actually is. We all go out there looking for the holy grail system, the holy grail trading strategy that we believe is going to change our trading for the good, but that does not exist. The moment you can find a trading system and you've tested it on the market and it works for you, and you've seen that, yeah, it can give you profit in the long run, what you need after that is a good risk management plan and a strong psychology base to understand that, yo, I've been stopped out of the market like 3 to 4 to 5 times today. You know what? I'm just going to kick back and watch what's happening. There are lots of days that come that they are not actually good days for trading, and you can hear that. That's why sometimes news is helpful. When you see high volume news events, it's best to stay out of the market during some of those periods, like election. The market is going to be in shambles, wicks everywhere. No one needs to tell you twice to get out, to avoid trading for that period. But I mean, you will still find a lot of people who will still trade during that period. It's psychology. And then if they lose money, they start pointing fingers here and there. And if they make money, they feel smart. And then the next time that there's election, they'll do the same thing. But will they be lucky that other time? And let's assume because they know that they were right the last time, they enter in with a higher position size this next time, and maybe it doesn't go their way. They lose way more money. They probably end up losing all the money that they made that week plus extra. It happens a lot every day because that is what this market is about. Forex was designed to actually take our money, not give us money. Anytime you trade, you're trading on the other side of your brokers. You're trading on the other side of the banks. We are always against them and they are always against us. That is how the forex market works. But institutional trading is we are trying to trade with them. We're trying to look at the areas they're looking at and trade with them. And there will still be times that you will still lose with the strategy because there is no strategy that's 100%. So, what is your psychology telling you those times that you're losing? What are you telling yourself? Oh, I don't know how to trade so much. Oh, it was this. Oh, it was that. It was this. Another way you can really improve your psychology is by having a journal. Each time you trade, write it down and write your reasons down for trading as well. I have a journal. As you do that, you tend to understand and see some mistakes that you make over and over again. And then you start to cultivate habits to cut off those mistakes or prevent you from making those mistakes over and over again. Another way to build your psychology is by reading books. Read Naked Forex. Read books that will tell you the reality of foreign exchange. These will help you understand why you need to be patient, why you need to let price do what it does and enter when you can and exit when you can. And then sometimes when you have a trade like this and your TP is here, even if price goes all the way up and you've closed out most of your positions, you're still going to be okay because your psychology, you understand that you wanted to put your TP here, you'll take profit there, price reached there, and that's fine. Even if price kept on going higher, you may have one more entry in just to test it. That's basically how trading works and how trading flows. So, when you really start to understand how important psychology is, the psychology is 90% of trading and then 10% is skill, trading becomes way more easier. So, they also believe that successful trading is complex. It's not actually complex once you can understand the basics. Once you can understand what you need to understand, like I said. And successful trading, they also believe that a myth that they also believe is the last one that successful trading is dependent on your trading system. I just covered that. It is not. You can have a trading system that gives you 60% to 70% hit rate in the market. Your hit rate is how many times you were correct with that strategy when you traded. So it could give you a 60 to 70% hit rate, and that is very good. A 60 to 70% hit rate is very good because when you apply good psychology with this kind of trading system and risk management, it boosts the hit rate to about maybe 75 to 80% or 65 to 75%, depending on how strongly you hold your risk management and your discipline and your psychology. So, institutional trading, like I said, also is just one of the trading systems we have out there. You really need to understand that what you tell yourself before you place a trade and when you've placed a trade is more important than placing the trade, than entering the trade and exiting the trade. Because that your mindset is what determines if you're going to be in the forex game long term. How you think. You may be thinking like a gambler and it may work for you maybe for the first couple months, but there will come a time where the market will pay you off. And then when that time comes, you ask yourself, okay, what happened? Psychology happened. The market happened. The market makers happened. They've been waiting for the day that you come by with the money that you've been making and the way that you've been making that money. And now it's the day for you to pay them back because you did not understand the basics of getting out and calling it quits or whatever the reason may be. So, this was another video, and this was all I had to say pertaining this video. Please, if you have any questions, if you have any comments, if there's anything, any area you want me to talk about, I will do that. And I will make more videos on institutional trading as I go by, show you some of the entries I took with screenshots, and have a blessed week. Bye.